William, we saw the Rand under pressure early on Friday after the Federal Reserve announced that increase in its discount rate to banks, but it seems to have recovered quite nicely from there.
Yes, initially obviously the market was caught somewhat off guard, and given the timing of the Fed's action, which was post the closing bell in New York, we did see a little bit of uncertainty creep immediately into the market, and people fled to safe haven, and the dollar had a massive rebound, and also we saw gold and the generally perceived safe havens come under a little bit of pressure. But as the day unfolded, we did see some good supply of dollars from local exporters, and we also saw the market trading back to normality, and hence we saw the gold price recover, and we saw the Rand gain some traction. Also in the late afternoon, when we had US inflation figures, that probably put a little bit of a damper on any sort of US recovery, or should I say extended recovery. And we saw the Rand gain some good ground to trade from as you alluded to, the morning around 774. By the afternoon session, we had traded at low 763.64.
Of course, just looking at those US inflation figures that came out on Friday afternoon, CPI up 0.2%, and core CPI, though, down 0.1% month on month. So really showing that inflation is not a problem in the US at the moment, and that it's likely to be some time before the Federal Reserve actually raises the federal fund rate, which impacts on consumers.
Yes. Obviously, the expectation was that with them hiking the discount rate, that we possibly see slightly more inflationary figures being released later in the day on Friday, but that failed to materialize, and hence we saw the perception of any immediate or short-term hike from the Fed, which would affect the consumer, has probably been put a little bit more on the back foot, and that expectation going forward until we see some real recovery in the States, probably going to be status quo as is. On the local front, obviously, we await a number of data that you alluded to: GDP, CPI, PPI, money supply. And the market currently is trading within fairly narrow ranges, and all on the back of what the expectation is going forward, and the release of the various data, as well as the outcome of the Eskom request for price hikes in the region of 35% for the next 3 years. Interestingly enough, the Reserve Bank in their inflation forecasts is very much more geared towards and expects more towards 25%, and any discrepancy in that obviously is going to lead to further uncertainty within the market and how sustainable the recovery would be. CPI, if I recall, the consensus expectation was in the region of 2.6%, and that would be for the fourth quarter of last year. So a lot hinging on the figures as they get released, and a lot hinging on what the Eskom result of that price hike is going to be.
Well, just perhaps taking a look at the CPI data that's coming out on Wednesday. December CPI 6.3%, so outside of the target range. The market really looking for CPI to stay outside of that target range for another month before perhaps coming into the target range in the February data. Looking for a figure of around 6.4% for January. What's your expectation at Nedbank Capital?
Yes, I think we would have to agree with the expectation. I can't see any surprises on that front. And obviously, all eyes on that. Also, interestingly, that the Ministry of Finance has indicated that they have discussed a slightly more flexible scenario from the Reserve Bank. So it will be interesting to see what goes forward. But yes, I expect us to remain above the 6%, the top end of the band that the Reserve Bank is monitoring currently.
Of course, the week winds up with the trade balance data coming out on Friday, and we know that we had a 3.7 billion rand surplus in December. January, the market's expecting a bit of a deficit, but the trade data really is quite volatile, though, isn't it, William?
Yes, of late the trade data has been exceptionally volatile, and I think when we look into that specific number, we obviously have to take into account the oil price, and as I say, that has been a volatile number, but obviously the oil price, and we have seen local increases in both the petrol and diesel price, which will obviously affect that specific scenario. And if I remember correctly, we'll see M3 money supply also released on Friday. And once again, I think we won't be looking for very many surprises in that regard. The consumer is probably still a little bit indebted, and we don't see any changing that, and that we won't see massive change in demand for credit for the time being.
And William, just quickly on the euro, we saw quite a big swing in the euro from around 134, just above 134 to the dollar on Friday, back to around 136. So quite a lot of volatility playing out in the dollar-euro exchange rate as well.
Yes, well, that all stems from the Greek scenario, and along with Greece, Italy, Spain, Portugal and Ireland have obviously come under the spotlight, and the positivity resulting to the euro, I think, stems from the fact that the ECB has indicated that they will take strong measures to try and assist those countries, and also the Greek Premier and Finance Ministry indicating that they wouldn't have to borrow at this current stage, and hence we saw some sort of recovery from the euro, and market impressions are that possibly it's a good thing that the European Central Bank has taken a very strong stance on trying to ensure that all the member states fall into line and take the harsh and drastic action that may be needed to save the scenario for those countries.